Hello, everyone. Welcome to RETCON. I hope you're having an awesome time so far. Our next session is entitled Optimizing Operations, Tech's Impact on Internal Processes. Please join me in welcoming our panelists to the virtual stage.
Hi, good afternoon, everyone. Welcome to our panel today. We have an exciting lineup of speakers to discuss our technology and its impact on internal processes within the multifamily space. I'll go ahead and introduce you to each of the panelists and let them speak a little bit about each of their companies. I'd like to start with Cindy with Bell Partners. Oops, Cindy, you're on mute.
Sorry about that. Good afternoon, everybody. I'm Cindy Clare. I am the Chief Operating Officer for Bell Partners. We are an investment and management company based in Greensboro, North Carolina. We are fully integrated. We manage properties across the country for both our own account as well as for third party.
Thank you, Cindy. And next up, we have Leela with Waterton.
Hi, everyone. Lela with Waterton. Waterton is a Chicago-based real estate investment and property management firm specializing in multifamily assets, playing mostly in the value-add space. We are national and manage about $6 billion in AUM today.
Thank you, Leela. I'd like to move on to Shawn with Cortland.
Hi, I'm Shawn Mayo. I'm with Cortland Partners, VP of RPA as well as ERP systems. With Cortland Partners, we are in Atlanta, Georgia, and we are national as well as international. We're a real estate firm that also is vertically integrated as well. And we have access throughout the US and international.
Thank you, Shawn. Our last panelist speaker is Casey with Obligo. Welcome.
Casey with Obligo here. I'm VP of Partnerships. Obligo is a security deposit alternative solution that is credit-based, and we use advancements in AI and open banking technology to rid both landlords and tenants from the burden of security deposits. Nice to be here.
Well, welcome, everyone. I'm Andino with TLC Management Company. We are a family office in Chicago. We own privately owned multifamily assets in and around the Chicagoland market, about $1 billion under AUM. So I think we'd like to kick off with our first question. Why has multifamily been slow to adopt technology in their financial and accounting systems, and what can be done to overcome this? I think we have several experts on the panel. I'd like to start with Shawn as he's focused on finance.
Yeah, so before coming to Cortland, I was in this same space with Price Waterhouse, and I've seen the progression and regression of just adapting to technology. So unfortunately, it's been a progression, with technology, because I think initially it takes capital investment to also start in that space that may and may not pay off. So that kind of makes a lot of companies want to hold back because of the initial investment. How you can overcome that is I try to take on small projects, get quick wins with these projects, and continue that momentum, and then find projects that has a bigger ROI.
Thank you, Shawn. ROI is definitely the bottom line, right? Casey, do you have something you'd like to add to adopting technology in multifamily?
Yeah, I've been on the vendor side of receivables and payables in multifamily for 15 years. And I think what I've noticed, at least personally, is that you see a lot of kind of specific business rules around multifamily financials with billing systems. Because of those rules, there's often been a lack of choice as far as solutions out there to match those business rules. On top of that, you also see a lot of legislation. Specifically in big markets like New York City or Chicago, you have specific regulation that kind of limits the options and choices of, software and innovation that these companies, can implement and provide to their tenants as well as their internal systems. I think a lot of that is changing now, but that's historically what we've seen in the market.
I would add to that I don't think the legal environment is changing at all. If anything, we're getting more regulations around multifamily. And so it does make it difficult because there are so many things that we are obligated to do. Add to that, if you're like Bell and you manage for your own account, but you also manage for third-party clients, having systems that are flexible, because you have to be able to adjust to what your clients' needs are. So it may be running multiple charts of accounts and things like that. And in order to do that, to Casey's point, you have to have systems that are really multifamily based. And there are not a lot of choices out there, but most of us are using one of those choices because it gives us the best flexibility to run our business.
And Cindy, I would agree with that. I think one of the things that is maybe not unique to multifamily, but for years there were limited choices in terms of property management systems in particular. And I think when you invest in one of those systems, you become kind of fully invested, particularly for those of us who are vertically integrated. It affects your capital markets teams, your capital team, your portfolio management, investor relations, obviously operations. And there hadn't been a lot of competition, I would say, in that space. But of late, we're seeing more and more really creative vendors look for some of those areas of opportunity and really present great products. And I think that that's causing the traditional PMS firms to really step up their game from both a service and a service offerings perspective. So I'm hoping that things continue to evolve and improve in that regard.
I agree, Leela. I think that the consumer managers like ourselves are demanding integration as well. When we are approached or working with somebody like Casey's team at Obligo, we are demanding that it integrates with our accounting software. And I think we're seeing a little bit more collaboration across some of the providers in this space.
Agreed.
Thank you.
And just to add that and shamelessly plug our own products, what we found in the security deposit space is that every state has a different rule on how you treat a deposit when you take it. Some states are stricter than others. New York and Massachusetts are especially strict because every deposit you take, you have to open a separate escrow account at the bank. It has to be a local bank. You have to disclose the account number to the tenant. And then when the tenant moves out, you've got to get these funds out of escrow and return it to the tenant. And that takes time, but you're limited to 14 or 30 days to do so. And that's also a paper process. You're cutting a check at the end of move out and you're mailing it to a forwarding address and you don't know where that is. So we tackled this process and eliminated it by just getting rid of the cash aspect of it. We now allow tenants to provide deposits without actually having to hand over cash. And if I have a chance, I'll dig more into that, but I don't want to take too much time.
No, I think, Casey, I think that's a wonderful segue to the next question. If we could have the question put up on the screen. Thank you. What role can automation play in financial systems? So I think, Casey, you started to touch on that just a bit, security and speed.
Yeah, so I guess one discussion point I thought might be worth bringing up is open banking. For those of you that aren't familiar with open banking is new technology that essentially spawned from the last financial crisis, where they passed the financial reform bill, often known as Dodd-Frank, which basically forced banks to modernize and create APIs so that their customers can more easily share their financial data when they want to qualify for things like renting an apartment, a loan, a mortgage, those type of financial services. So you're going to see more companies, we use it as well, but especially on the leasing side of things and risk assessment, you're going to see companies implementing open banking so they can more holistically evaluate renters when they apply to live in apartments. This is just more data that leasing agents didn't have before to understand the true kind of holistic nature of that tenant's finances and not put as much emphasis on the credit score, which I think a lot of people agree doesn't tell the whole story these days. You could have had somebody who had a bad event 10 years ago and it still reflects on their credit score, but now they're doing really well and they're flush with cash. So things like open banking allow you to see in real time that they actually have really good liquidity, and you want this person as a tenant. They're going to pay their rent on time every month, and find different ways to accept more renters without taking on new risk.
I think one of the other ways you're looking at this is you're looking at predictive analytics when you're looking at credit screenings now versus just taking the data. You're really looking for what are those predictors that are going to help you. So I think more automated, most of us are using third parties to do that work for us and get that information back quickly, because our customers are looking for speed today. They want to know immediately whether they're accepted or not accepted. Additionally, on the financial, we all have had to pivot this year and figure out how to get our residents to pay remotely, because we're not accepting checks in the offices at the moment, or we're having to figure out a creative way to accept checks. So finding ways, we've rolled out text to pay, obviously the direct deposits, debit, ACH, API feeds into your accounts. All of those are great. One, because we get our rents faster, but also two, it saves our teams time on the site level because they're not having to scan checks. They're not having to make sure that posting errors aren't occurring. So the more we can do electronic payments, the more we can figure that out, the more efficient we are, both from a collection standpoint and from an operating efficiency standpoint from a people side. So I think that's been a big focus, and the industry is moving in that direction and was forced really to, for those that had not adopted it, were forced to really ramp that up, given what happened this year with COVID.
Cindy, that's
I read this question a little differently, guys. When I first saw it, I just started smiling because for me, automation, I see it as it bridges a gap and optimizes financial systems, because it reduces costs by not having to upgrade or version control or implementation, by utilizing macros or things of that nature to kind of enhance the financial systems that we currently have. Have you guys run into the systems that you currently have, and been able to enhance it based on automation using macros? Or
we've actually used a software, Shawn, called, and I am not the financial person, obviously, that's why I'm the chief operating officer, not the chief financial officer. But I know our financial team just implemented Blackline, which is an automated tool to help with bank recs. And when you're managing over 200 properties and you have 200 bank accounts for those properties, because they're all individual entities, anything that you can bolt on, to your point, Shawn, that works behind the scenes to help automate some of those really tedious but critical tasks like bank recs. So I know that's one of the things that our team has done, is put Blackline in place, then allow that to work with our PM system to make sure that we can, again, be more efficient, more effective, and actually, quite frankly, more accurate, because it's being done automatically versus something that has to be done by a person. So
I think, like Shawn, sorry about that.
Okay.
Like Shawn, I read the question a little bit differently too, and very much like what you just said, which is, we started the conversation by saying when you're introducing technology, you have to prove ROI in most cases. And sometimes it's not as clear as a pure return on that investment. But what I think we find is that there are other sort of non-expected things that occur, and that is accuracy improves tremendously. So when you think about what we do from a multifamily perspective and just how we do amenity-based pricing for our apartments, there is a lot of entry that has to take place, and it has to be done accurately and correctly. Introducing automation that helps us review all of that information in our PMS systems has kind of immeasurable results because you're really enhancing your revenues from that perspective. You're ensuring that your billing system is much more accurate, much more precise, much more efficient. And I think the other thing that we have to also take into account is that you're also freeing up resources. Lacking automation, you're using a lot of capital and human resources to do a lot of mundane tasks. Introducing automation allows you to resource those resources so that they can be doing things that are really value add instead of tasking. So I think that's another way of looking at introducing technology is allowing people to do things that are maybe more rewarding from a personal perspective, but also much more effective from a business perspective.
So it's taking the mundane tasks that people normally do and allowing them to do the value add to the organization.
Agreed. That's a very good point. And it frees up, and you could start to calculate that ROI when you're communicating with your residents on a faster basis on application approvals. I think that segues very nicely into, technology playing a role in billing systems. Cindy, you mentioned your company utilizing Blackline for bank automation of bank recs. Is anyone else using some new technology as far as billing rent or collections?
So we're also using Blackline as well. Cindy, I spoke to a couple of members of your team. We rolled it out a little bit before you guys, and Blackline, we're totally happy with Blackline. Well, I mean, we use Blackline. What I try to do also is look at the market, right? See what's out there in the market, and also using RPA as well to kind of enhance some of the current ERPs that we have, and kind of enhancing them and adding to them without, having another bill per se, right?
And I might answer this question a little bit differently. There are certainly programs that we're using that help us become much more efficient from billing systems, and things that we're custom building ourselves as well. Silly things like payment of late fees, or ensuring that everybody has insurance, because that's obviously very tricky for our industry. Automation can certainly help us in that regard. But the other thing that we're doing, I think as an industry as well, is really taking a look at all of the various tasks that have to be performed and recognizing what is aligned with our business and our culture, and maybe making some choices about things that we ought outsource. And so you're using really subject matter experts to perform the tasks that possibly they have the scale that you just don't, and you can't do in-house because you simply don't have the resources. And so really taking a close look to see where automation internally makes sense and where you have to seek help using resources outside of your own firm. And I think both can be valuable.
Leela, I think that's a great point, because I do think there are things that many of us tried to bring in-house, and I'm going to date myself, but I remember the days when we had our own housekeeping. We did everything in-house. And we finally figured out that was not efficient and not effective, and we outsourced. And now we're looking corporately at the same things. What are those things where you're better off with a subject matter expert? I think revenue management is a perfect example of that, where we all brought in revenue managers and found it's not scalable, and it's not as efficient as using subject matter experts that are doing the revenue management day in and day out, and quite frankly are probably more objective than those in-house people who form relationships with your teams. So I agree with you. I think it's finding those things that can be more efficient on the external, not just looking at the technology, because sometimes we look at so much technology, we overwhelm our teams. And so one of the things we've looked at as well is being very careful about how much technology do you roll out before it just sits there and doesn't get used appropriately. So really looking at the technology we have, and are we really fully utilizing it in the right ways? Because I think sometimes we use 10 to 20% of it and leave 80% of it on the table. So really going back and relooking at that as well.
I can certainly attest to that as one of the smaller landlords on this panel. It is very important with what we dedicate our team's time to. We're vertically integrated, but if we're going to spend months integrating a new software system, by the time we're all using it to either half of its capacity, technology has evolved beyond us.
Yes.
Casey, you could probably speak to that as one of our technology subject matter experts, focusing in on a particular pain point for some landlords.
Yeah, absolutely. And I think, I talk a little bit about what we do as far as eliminating the cash deposit. Another piece of that business that falls under this category of billing automation is that when a tenant moves out, and if they behave badly, we pay the landlord immediately. We then go to the tenant to collect the money back. So we've actually built our own automated collection system that relies on email and text messages, and we do very well with it. You're going to see companies, one that I find really impressive is a company called DebtLogic, and they provide automated collections tools across different industries, including multifamily. And what these tools do is they allow you to squeeze that lemon a little bit more yourself as far as recovering your bad debt directly from residents before you outsource that piece to a third-party collection agency who you're then going to have to do a big split of anything that's collected. So, we often get asked if we can do that, and we get asked about it so often, we're actually building it. So that's going to be an add-on service that we offer to utilize our own collection tool that is highly sophisticated and highly successful, and offer that in our suite of services as far as going after those residents who provided a deposit, but it didn't cover what was actually the open balance when they moved out.
Great. Well, good luck with that exploration and planning. Sean, do you have something you would like to add?
I was going to ask Casey, and how does the resident receive their security deposit when they do move out? I might have missed that part. I'm sorry.
Yeah, so there's two scenarios. So with our technology, most residents are not paying a cash deposit at all. Instead, Obligo is backstopping their security amount with a line of credit. So we're a credit facility, just like Visa, just like MasterCard. But what's unique about us is we're backstopping deposits. So no more cash. If the tenant does something wrong, you charge their credit line, you get paid at once. It's not insurance, so there's no claim, there's no scrutiny. Now, the other scenario is you always have to give the resident the option to pay a traditional deposit. If they go that route, we also help you. So we allow you to collect that cash deposit online with certified funds, so no more cashier's checks. And then at the end of the lease, we have a feature that allows you to return the deposit electronically. So that's, I think most people on this panel will know that most operations still return deposits via paper check. We do it electronically. So you make your deductions, then we send those funds directly back to the resident's bank account.
So what I've implemented, where we're rolling out now, because our stick is make sure that the resident has a great experience living with us. When a resident moves out, I have a thing called quick pay. So when a resident moves, as soon as they move out, they'll get an email or text, typically a text on their phone saying, please collect your refund. And they'll go in and they're able to put in their routing numbers right to the bank that we have, their bank of choice, and they're able to collect their refunds instantaneously. So what we try to do is cover make the experience for the resident move in and moving out a full, great experience so that they are able to come back to us. But Casey, I mean, the front end, I'm not an expert on it, but the back end, that's the experience that we want to provide to the residents.
Yeah, that makes a lot of sense. Yeah, for us, we want to move, the financial pieces of moving in and moving out as simple as checking in or checking out of a hotel. And that's, what we, base our credit model.
All right, thank you, everyone. I'd like to move on to the next question, which I believe kind of brings us down to a little bit more of a micro or we could consider a micro conversation in our current environment that we're all finding ourselves in now that we're all very remote, maybe more remote than ever. It's challenges multifamily industry has faced for a while, having teams at properties. If you're vertically integrated or servicing a third party owner, you have teams all over the country, all over properties. You are remote by nature. And then now at our current environment, we are our peers, our corporate offices, our meetings, even in our particular office, we're having teams meetings down the hall with each other in order to be at a safe distance. So, in this current environment, how are market leaders using technology to train our employees remotely and training new employees or evolving in our technology sources? Leela, would you like to start with that?
Sure, as soon as I unmute, sorry about that. It's interesting, when we try and roll out new technology, there's so much analysis that goes into play, right? You're thinking about every vertical that you might touch when rolling something out and what the impact of that might be, and you're doing desktop exercises and beta testing and all sorts of other things. But with COVID, there was no time. Things that were sort of in your pipeline were rolled out because you needed them. And if there's a bright side to all of this, I do think that technology has really benefited, or at least multifamily has benefited with the use or increased use of technology. So when we're talking about training employees, I think most of us did some virtual training and some in-person training, thinking especially about when you're onboarding new assets or even offboarding. And what we found is that while I still believe in person-to-person contact and socialization and how that really drives engagement, I do believe that what we've learned is that virtual learning, particularly when it's interactive, is very, very effective. The other thing that we've learned is that we believe that training in bite-sized groups is much more effective than large groups. So if we're delivering a message or doing an award presentation, we'd like to have these very large audiences. However, when we're introducing new processes or new technology, we found that shorter, smaller meetings are much, much more effective than larger groups. And I think the use of instructor-led training using technology is really, really critical. So of course, I think all of us use pre-recorded messaging, pre-recorded training, regardless of what system you might be using, but we've really enhanced that with instructor-led training. And then finally, the other thing that we're finding, and I think this was pre-pandemic, is that our training has to be almost like what people are used to consuming today, and that's short and concise and quick. And so using videos to train, we've learned, is much more effective than these long meetings about processes. People, can click on a 2-minute video and learn mostly everything that they might need about a move-in process.
Yeah, I would agree with that. I mean, we had to shift very quickly, and I do think we all are so used to, we were piloting things and we had to just roll it out and figure it out on the fly, which actually has been a good thing, I think, for the industry, because we tend to move slowly because we are dispersing things so broadly across a portfolio. We took we had webinars already, we have, an LMS system, but we took all of our in-person training and moved it to virtual. We were doing virtual onboarding, virtual, and these are instructor-led, to your point, Leila, with smaller groups, but doing a lot of virtual training and finding that it can be effective. It does need to be shorter. We've also, because we're changing things every week, depending on what's going on in a market and what's going on with COVID, we're now doing what we call vlogs, which are videos led, and then we email out and say, here's the latest vlog on AI tools, or here's the latest vlog on the new requirements for XYZ, but very short snippets. and people respond very well to that. In addition to a daily, we do, like, it was daily, now it's twice weekly communications that we send out with links that all the teams get so they know where to go and find things. So I think it's using multiple channels and figuring out what's the best way to get that information to your teams, but still keeping that connection. To your point, that in-person training, you can't replace it, but the virtual definitely is very effective and can be as effective as in person. And then it's that connection. So the virtual allows you, at least like something like this, to give some connection, people to people. So again, we'll do virtual onboarding, and I'll get on and welcome a new team, which is a lot easier to do than me getting on a plane and flying somewhere, which clearly we're not doing right now.
So we've taken a three-pronged approach: social learning, forums, interactive chats, roundtables, adaptive learning, allowing associates to learn at their own pace using various methods, as well as learning on a go, meaning they use their tablets and they or their phones, and just, we put some subject out there and they learn as they, whenever they have time.
Learning on the go, that's a great point. And I do think all of these being launched forward into more virtual aspects of our business is still a little bit personal. Everything I prefer to do video now. If somebody sends me a conference call number, it's always like, I just prefer, let's try to do as much face-to-face as possible. All right. Thank you. I'd like to move on to the next question. I think we're about halfway through our time here. The next question is, how can AI be used in training? Is anyone on the panel, just a raise of hands, who's using AI or researching it? Okay, Cindy, great, you're up.
So we are doing an AI tool on all of our software. So if you get on our Workday, if you get on Yardi, if you get on any of our software tools, there's a chatbot on there that will walk you through processes. It'll say, do you need help? What are you trying to do? And it will give you that opportunity then. So while we'll still do the virtual training now, because especially when you're talking about a lot of the software and they're brand new people, you throw hundreds of processes at them in the first week and then expect that they remember all of it. And so the AI tool allows them to go, oh yeah, that's what I needed to do, and walk them through, which saves us in tickets or things being done wrong or not being done at all because they didn't know about it. So we have found the AI tool to be really, really helpful. And we rolled it out on a couple of pieces of software this year. We're going to expand that next year and roll it out on more software. In addition, we have found virtual reality tools to use for our maintenance training, because all of us that are operators know that putting maintenance guys in a classroom and trying to teach them something just doesn't work, that they're hands-on. Well, virtual reality allows them to go in and do an HVAC repair or a plumbing repair. And if they make a mistake, it tells them. We tested on one of our VPs of operations, and she electrocuted herself as she was doing an electrical repair. And it says, oops, you've just, killed yourself because you just, but it gives them that hands-on learning. You have to buy the glasses, and but it is definitely effective, and far more effective for that kind of training when you're working on equipment. So we've rolled out both of those tools this year.
I might add, I think the other thing that, not necessarily on the training side, but I think most of us probably have in-house or third-party support to facilitate the work that has to happen. And the way that we're using it is to really quickly evaluate how many work tickets we get for various issues where support personnel are needed, and really trying to understand the nature of those work tickets and adjust our training, whether it be virtual or in person, going forward. Because I think what we're learning now much more quickly than we were able to do in the past was, it's not always the person, it's the way that we're delivering the messaging. And that's what's causing some lack of understanding in the way that we're delivering our learning and to our teams. So really quickly being able to analyze what's happening and making quick adjustments.
Well, I think that's very true. Some people need to see it, some people need to hear it, and some people need to do it. And so if you're not finding a way to do all three, you're probably missing with some people. And most people need two of the three to really retain it. So I think it's we have found it to be very effective, and you're seeing the same thing. It's that same AI tools that you're using on your websites. I mean, we have chatbots on our websites. It's a very similar concept. You're trying to lead people through a solution, and the chatbots, we find the same thing, that our prospects are much more engaged on our websites and stay on our websites longer because we have AI tools on them.
Yeah, and I think the expectation is that you get a fast answer and that it's consistently answered. And I think that that's the other thing, that whether it's a chatbot or an AI tool, that we really, kind of underappreciate. I don't know, is that a word? In that anytime you're supporting anything with humans, there is interpretation and there is messaging, versus technology, obviously using algorithms to learn. And so the answers, whether it's from a training or a customer perspective, are consistent and fast.
That's exactly right. Lead management, we do it with lead management as well. We use an AI tool. They don't get busy and have somebody in front of them and forget to follow up. They're doing that follow up on a consistent basis, and to your point, very quickly. And I think that's what our customer is expecting these days, and so we have to find a way to meet those needs.
Yep. Our customer also being our associate, they want an immediate answer as well.
So we've also rolling out, I think I mentioned our RPA program. So we're rolling out AI powered training. What I love about it is adaptive, and it allows us to modify our training for each associate. Also, part of the AI program, it allows certain video tutorials to be recommended to certain associates based on what their chosen preferences.
So gone are the frequently asked question lists that never seem to apply to anybody. Thank you. That's very good insight. Casey, do you have anything that you wanted to add to the AI conversation?
I talked about open banking earlier. That's really what we use in AI, so I won't bring it up again.
Yeah, customizing and expediting processes and questions and answers. I'd like to segue into our next section of questions, which have to do with data management, a pain point for everybody in any real estate silo or really any business today. Starting off with, what are the most common mistakes that any of you see in data management within multifamily today?
I guess I'll start. What are the big assumptions? It's always that the enterprise data is clean, right? I think that's a mistake that a lot of us, and I see Cindy laughing. I think we've gone through that you always assume that your data is clean, and I believe that's a big assumption and mistake that a lot of us go into, and then also not going through the proper steps of assessing phases. I think people always the data's gonna be clean, so we're gonna go live tomorrow, right? Not understanding that there's phases that have to happen, including cleaning of data.
Yeah, I think I would start with, is the data clean? That's obviously very, very critical. I think, when all of us have been doing this now for many years, but you think about data culture and making sure that everybody within the organization is committed to that culture, that there's data governance. When we first started with these initiatives, we really didn't think about governance and really data definitions, which I would probably characterize as an industry issue as well as individual companies, because there aren't standard accepted definitions of certain metrics that we use as KPIs. And I think that that's a true challenge for the multifamily industry. I know that there have been initiatives. I think Cindy's trying to chime in.
Yeah. No, go ahead, Leela. Finish.
No, go ahead.
Well, I was going to say, I think I agree absolutely with the data piece of it. I was laughing because and everybody thinks that's so easy, and it's not as easy. And then the second part, Leela, when you're talking about what are those KPIs, and everybody has a different definition. More importantly, I think, is also what are you trying to use the data for? I think we have so much data that we get caught up in the minutia, and we're not figuring out what KPIs do we really want? What data should we be paying attention to? Because not all of the data, we can't possibly look at all of the data. So narrowing down what your focus is, or you're going to drive people nuts and you're never going to make a decision because there's always going to be more data you can look at. And so I think figuring out what those KPIs are, to your point, and then how do you measure that? Because we're all benchmarking ourselves against each other, and we go, well, but they don't do this, or we don't look at it this way. And so, the comparisons really are not apples to apples because we all categorize things and name things differently. And so there are slight nuances, but those nuances can make big differences in our data.
Agreed.
One comment I would make specific to data is really that operators need to be careful with choosing their SaaS platform providers, their accounting softwares. Often I've heard feedback that they feel like their data is being held hostage. So they pay for the SaaS platform, it's their data, but they're somewhat restricted on how they can share their data, especially with third parties. Oftentimes you run into antiquated APIs, you run into charging additional fees to share that data. So I think what we're going to start to see is new platforms coming out that are truly open. Open APIs where there are no restrictions on how you share your data. You're allowed to choose how to share your data and choose who to share it with. So that's something I think
all of our technology people are shuddering at that idea because of the cybersecurity piece of it. So, I'm like, why can't we do this feed? And our technology people are like, we've got to look at the cyber piece of it. So I agree with you. I think that it absolutely is where we go. But, cyber has become something that we also, when we're looking at data, and you look at now the restrictions that are being placed in certain states on what data you can use or getting permissions to use that data. So that all plays into what we do with data these days as well. So there's, we talked at the beginning of this about how many regulations there are. That's just the next piece of regulation that we're going to have to deal with is how are we allowed to use people's data? And what does that look like? And then what does that do to our KPIs? And what does that do to our definitions? But, that's coming and we're seeing it. I mean, California's already enacted legislation about it. So yeah, it's going to spread.
Yeah, absolutely. It starts in California and then spreads, certainly. And I think, I was on a seminar the other day where somebody said that the amount of data, we as operators have, it's almost like you're managing a large metropolitan area. And so to the extent that is, and it is very public, we will become larger targets for cyber thieves. And I think all of us spend inordinate amount of time making sure that we're protecting ourselves and making sure that our vendors are protecting us as well. And I think that becomes a greater threat and consideration for everything that we do. It can be overwhelming.
Very good point. And bringing us full circle to legal regulation and integration of our software systems with protection and security being at the forefront. So excellent. Well, we are nearly out of time. So I want to skip to the last question we discussed, which was, I'd like everybody to comment on 1 or 2 or 3 items, however many you can come up with, but advantages you think that owners have today and operators have today who have adopted tech forward systems, who are implementing AI and who are launching forward in the real estate industry, and in particular multifamily. So what advantages do we have today? Leela, would you like to start?
I guess, going back to what was already said, it's those time-consuming, inaccurate, low value, I guess that's the best way to say it, low value tasks that are being replaced, giving employees to do really more rewarding things personally and for the organization, really enabling employees to become assets for the organization, and ultimately its competitive advantage versus performing mundane tasks with low degrees of accuracy.
And I would absolutely agree with that. I think it is your performance on your properties is going to be better when your teams feel like they're adding value and they're not just checking things off on a list.
Yeah.
I think it's fascinating, and it may come true, but every time we add new technology, we think we're going to reduce the number of people. All we do is increase the number of demands on our people whenever we add new technology. But I think the more we can make our teams efficient, maybe we do get more efficient from a people standpoint, but more importantly, just what Lela said, we allow them to create and add value to the properties that they're on, or to the properties that they're overseeing, whether that's on a corporate level or on a site level. And that ultimately is going to improve performance, which ultimately is what puts you ahead.
I wholeheartedly agree. I can relate it to my bots that we roll out by giving the associates the ability to have these bots. They're able to do more meaningful tasks and less mundane work. This gives them the opportunity to have more meaningful interactions, as well as service and provided to our residents.
One thing I would add is I also think it makes you more scalable. If you're doing it right, you may not be subtracting people, but you may not need to add as many people because you've become more efficient.
Yeah, and not to kind of pile on, but the point that I think we're all trying to make is we're allowing, particularly when it comes to our on-site teams, we're allowing them to have time to spend on their customers, which, by the way, this is what this is all about. Being able to render a level of service that is unmatched because they're not in front of their computer doing data entry all day long. So again, the customer focus ought to be enhanced as a result of innovation and automation.
Great point. Casey, would you like to add anything?
Sure. I guess I'm just kind of thinking of this, in the terms of COVID, and I think we all agree that, any operators who pre-COVID had already implemented virtual leasing and virtual type operations and automation certainly had an advantage once COVID hit and the country changed. I think the focus now is, more on retaining the good renters you have, those renters who are there, they're paying rent, they're having, great deals at other apartments being dangled in front of them because everybody's trying to attract renters, but you can also have these systems in place to incentivize the renewal. We've been doing a lot of that at Obligo. We go into a building and we return deposits that were already taken mid-lease or at time of renewal to give that incentive to the resident to stay on, generate goodwill, provide good PR. So certainly those are advantages.
So technology today is supporting our team members to become more satisfied in their work and able to evolve it professionally, but bottom line, providing a better experience for all of our residents in their homes. So great. Well, this was a wonderful discussion. It's been a pleasure to speak with each of you. Thank you for your time and your contribution. I'd like to turn it back over.
Thanks so much for moderating, and thank you to all of our awesome panelists. We really enjoyed you being able to share your different perspectives with us. I know I learned a lot, so I know our audience did as well. A big virtual round of applause. All right, if you're looking for your next session, you can go ahead and check out your agenda or take some time to do some one-on-one networking with your peers. Maybe discuss what you've learned today. That would be awesome. All right, we'll see you around.